Forget about treasury bills, treasury bonds, and money market funds for a minute. Let's talk about Arvocap Special Fund, also known as Arvocap Multi-Asset Strategy Special Fund. I know special funds are the new talk in town, especially in the investment circles, and for good reason. Many are delivering eye-popping returns, with some boasting up to 29% gains in 2024 alone. And as rates of treasury bills, treasury bonds, and money market funds keep maybe sliding down, it's no wonder investors are flocking to these multi-asset vehicles, or if you like, into these special funds in search for better opportunities. But what exactly sets these special funds apart? And could they be the next big thing in investment, or even better in your portfolio? Today we are analyzing Arvocap Special Fund to see if it's best fit for your money. It is my job to dig deep and break down complex investment products or opportunities and help you spot opportunities that might otherwise fly under the radar. And today I'm excited to introduce a fund that is new in the market but have massive opportunities, just like any other special fund. Yes, and for the first time in this channel at Study of Wealth, we are introducing to you the Arvocap Multi-Asset Strategy Special Fund. So far, we have looked at special funds like Mansa X. We have also looked at Oak Special Fund, and it looks like people are interested in such investment options or opportunities. So I will keep looking at all the options in the markets, and I will be breaking them down to find out if it's a good option for you. So make sure that you're not missing out on that by subscribing to Study of Wealth. And from the reviews and the comparison video I did for these funds, it's very clear that people wanted to know how safe the capital was, or how safe the capital is when you invest in special funds, and whether these funds guarantee capital preservation. And we did a full video about the safety of special funds, so if you have not watched that video, make sure that you watch it before investing in any special funds to understand whether your capital is preserved or there is a likelihood of you losing your capital when you invest in a special fund. I will leave the link in the description box, and I will attach it here, so if you're interested you can just check it out and watch it before investing in any special fund. Yes, it's very important. Okay, now for Arvocap Multi-Asset Strategy Special Fund, I think this is a real special fund even among the special funds, so make sure that you stick around to understand how it works. And based on my analysis, this fund has features that may appeal to some investors, especially those who are looking for a dollar-denominated investment. And this might be because of the uncertainties surrounding the Kenya shillings and also the global markets. And people in diaspora, this might be what you have been looking for. Again, this is from my analysis, and this video is for educational purposes only. Make sure that you assess the risk of the fund and your risk tolerance as well before you go in. Okay, and before we dive into this, a quick reminder: if you have not subscribed to this channel, you're missing out on investment opportunities, you're missing out on investment updates, you're missing out on investment tips and also reviews, because that's what we do here. Please subscribe before you forget. Okay, so what makes Arvocap Multi-Asset Strategy Special Fund stand out, and could this be the new direction all the fund managers are taking? Let's dive in and find that out. And as usual, we start with the most exciting part, and that is the returns. And so as you realize how big this is, I want to start with a sample return of a money market fund. And the reason why I'm doing this is because this fund is denominated in USD. And if I say the direct returns, you might think it's not based on the Kenya shillings returns on other special funds. So let's start with a sample return of a money market fund that has both the Kenya shillings account and a USD account. I would welcome you to even check the fund fact sheet for other money market funds account, or companies or fund managers that have money market funds account for USD and a Kenya shillings account. You see the returns in the USD market. And after that, you'll be able to appreciate these returns in Arvocap. I'm doing this so that we can know how to evaluate these returns. And from this is a Saiton money market fund. And of course, you know Saiton money market fund is the one that has been doing very well in the market. So I'm going to use Saiton Money Market Fund, and you can see here for the money market fund, the Kenya Shilling Money Market Fund in 2024, it had a return of 17.4%. And for the USD Money Market Fund in the same company, it had a return of 6.8%. For 2025, you can see this is March 2025. The returns were 15.7% on the Kenya Shillings Money Market Fund. And for the Saiton Money Market Fund, USD is 6.8%. You can see the difference, yes? You can see the difference in these two, all right? And that's what I wanted you to appreciate before we say how much returns did Arvocap give its investors. And I think we have done a video to compare the Kenya Shillings Money Market Fund and the USD Money Market Fund before, and we saw even if the USD rates look low, when you do the maths, they add up, right? Make sure to watch that video so that you understand how this works. Now, get this, the Arvocap Multi-Asset Strategy Special Fund, they gave an average return of 15.89% on the dollar. And maybe people who are in United States, maybe you can tell us the current returns on your money market funds. I checked one of the famous money market fund in United States, and please correct me if I'm wrong, but as at April 2025, it was at 4.03%. So getting 15% is massive amount, right? Let me know in the comment section, what do you think about these returns? And maybe I can give a simple explanation for this. When we say 15% return on the dollar is not the same as 15% on the Kenya shillings, it's simply because the dollar is more stable than the Kenya shilling. And in cases when the Kenya shillings weaken against the USD, if you have invested in a dollar account, it would mean your money would not lose value as compared to someone who have invested in a Kenya shillings account. And I know there are some people who convert their money from Kenya shillings to dollar just to preserve the value, and this is the same concept. For example, if you invested $1,000 in a fund earning 15%, that would give you $1,150 at the end, for example, of that year. Now, if the dollar goes up against the Kenya shilling, say from 129 to, let's say, 135, your returns grow even more when you convert back to Kenya shillings. So you gain from both the interest rates and the currency exchange. But again, all this is risk taking because Kenya shillings can also become stronger as you are investing, meaning it goes back to diversification and also calculated risk and maybe understanding the economy and assessing your risk tolerance. Because when you're going to these investments, you're going with the mind that you're going to make profit, but there is also chances to make losses. So make sure that when you're investing depending on your risk tolerance. You're not investing more than you can afford to lose, yes? And I know this is a term that is used a lot, but it means a lot because when you have that 250,000 Kenya shillings as your investment, then it means that it's not worth risking, okay? So make sure that when you're going in an investment, you have already assess your risk tolerance based on how much money or what portion of your money are you putting in this investment, okay? So let's get into the details of how Arvocap multi-asset strategy, this special fund, allocates the investors' money. We look at how risky it is, how it works, and if it is good for your investment. In one of the videos that we did previously, someone mentioned that I should always start by defining the terms, not to assume that everyone knows what I'm talking about. And for those who are new, a special fund is a collective investment scheme, meaning that the people who are managing the fund, they're called fund managers. They collect money from different investors and they invest in different assets. The special funds also goes with the name multi-asset strategy funds, and these are funds that are not new in the world, but are relatively new here in Kenya. And I'm very sure more fund managers are going to pick this up and you're going to see more of these. And by multi-asset strategy, it means that they invest in more than one asset. For example, they can invest in shares for different companies, both in local market and also global market. They can invest in precious metals such as gold and silver. They can invest in commodities such as oil. They can invest in technologies in different sectors. They can invest derivatives, ETFs. So basically, they can invest in any place place, they feel they will make money for the investors, and the list is long. And what I want you to understand is that they invest in all these at the same time. They get the money from the investors and allocate the money to these different things. This is what is called diversification, and they do this to diversify your investment and make sure that you are getting amazing returns as they lower the risk involved in investing in a single risky investment or asset, while at the same time they are protecting your capital by diversification, basically putting your eggs in different baskets. Okay, now let's get into the structure of the fund. First things first, the fund is regulated by Capital Market Authority, that is CMA, and it falls under the collective investment scheme. So I confirm that the fund is regulated by CMA. Yes, this fund is managed by Arvocap Asset Managers, and this company is new. It was founded in 2023. And in May 2024, they were licensed by Capital Market Authority, and the fund, now the special funds that we are talking about, has been in operation since June 2024. The fund custodians are NCBA Kenya, which is very important. For those who do not know who custodians are, these are commercial banks, usually commercial banks that hold your money. So when you invest, you're investing through NCBA. And then the fund managers, their role is to make sure that this money, they're instructing the custodian to put this amount of money here, this amount of money there, like that. Yes, so for Arvocap Special Fund, they invest in a range of assets in the global marketplace, and the fund invests in equities, they invest in fixed income, they invest in commodities such as gold, oil, sugar, soybeans, wheat, copper, silver, and such. They also invest in what we call CFDs. They invest in ETFs, crypto, and other structured products. Okay, so they invest in all these things, and this is how they decide which asset or which investment to make. They usually analyze the trend in the global market that is shaping maybe the world markets. Yes, and these are things that affect how money is moving and where there are good opportunities, or where good opportunities might be. For example, they can invest in things like artificial intelligence or maybe emerging markets, just areas where the fund thinks interesting changes are happening. And by focusing on these areas, they aim to make smart investment decisions. It's basically, I would say, spotting a wave in the ocean and deciding which one you want to ride on, because there are so many waves in the financial markets or in the global markets, and they now decide, now we are going to take this one because we see an opportunity in this one. And you can see from this screenshot, they focus on different themes. Now that we know where they invest the investors' money, let us look at the key features of this fund for those who want to start investing. And we are going to start with income distribution. So this fund usually distributes the incomes to the investor's account in form of units monthly, meaning that they compound on a monthly basis, and these units are reinvested for compound interest. Yes. And you also receive a fund fact sheet on a monthly basis, and the fund usually benchmark the returns on the Bloomberg Global Multi-Asset Index. If you're interested, you can always check out their fund fact sheet. The fund has a lock-in period of 6 months, and after that you'll be free to withdraw part or all your money with no penalty. You can get your money in 2 to 3 working days, meaning Saturdays and Sundays are not included. And like any other special fund, this is suitable for long-term investors of up to 5 years and above. So this is not for everyone. It is for those investors who are willing to wait for or to invest for long-term years. And as we said in the beginning of this video, this fund is denominated in USD, and we are going to look at, and we have already said that the returns are 15.84% on the dollar, and that is in 9 months since it was launched. That is from 3rd June 2024 to 28th February 2025. The minimum that you need to invest in this fund is $1,000, and the minimum top up is $1,000. And if you have Kenya shillings, you can still invest in this fund. All you need to do is deposit the funds, and they're going to convert the funds for you to US dollars. Yes. So this fund also have fees. and you have to pay a 0.5% initial fee when you're investing. This is 0.5% of whatever you're investing, okay? And then they have a management fee of 2% per annum, and this is charged on the asset under management, okay? And then we have performance fee, which is 20% on the net returns. So this is charged on the returns that you're getting, not on the asset under management. So this fund is not subject to withholding tax. Now, we have already looked at what you're going to get if you invest in this fund. We have looked at what is the minimum required for you to start investing. We have looked at the fees, we have looked at the regulations, and we have looked at the structure of the fund. Now, the big question is, how risky is this investment? And that's what I want us to look at next. And I'm going to share what they have shared in their fund fact sheet. Is it in their fund fact sheet? In that document that they shared to me. And they have categorized this fund as a 7, yes? And in what we have seen before, money market funds are a 1, yes? But this fund has been categorized as a 7, meaning this is a high risk investment. And before you go, because I have mentioned a risk profile of number 7, I would like to share what they have indicated in their documentation, and I'm going to read. And they say the fund is rated category 7 due to its exposure to different asset classes whose risk characters differ greatly. Due to the low correlation of the asset classes in the fund has potential to achieve high degree of risk and return diversification. Some of the assets in the fund, such as the CFDs and other derivative products, are leveraged or trading with margins, basically meaning that they trade more than they have. And this is where they trade or they predict that the market are going to go in a certain direction, meaning that they can make money when the markets are going up or when the markets are going down. At the same time, they can make losses when the markets are going up or when the markets are going down. And they go ahead and say, even with the diversification and risk control measures such as stop losses, extreme market movements may lead to several stop loss triggers, thus affecting performance of the fund. And I will explain this. When you're trading, when you're doing active trading and you're betting, for example, or you're predicting that the market will go in a certain direction, you usually put a stop loss in the opposite direction to just make sure, just in case you are wrong or the market do not go as you had predicted, that it's going to stop the losses that you're making, or it's going to close the trade at a certain level so that you don't make more losses, okay? And according to this, they are saying in extreme market movements or in volatile markets, this may lead to several stop losses, because sometimes, yes, the market might go the way you had planned, but because the markets are volatile, they may hit the stop loss first and then they start going to the direction that you had predicted. And as I had mentioned in one of the videos that we did, we said that there is no trader that will be correct 100% of the times that they're making trades. Even if you're experienced or even if you're very good, sometimes you will make losses, okay? So in volatile markets, and remember, we are talking about in volatile, or we are talking about in extreme market movements, they might make some losses, okay? And they go ahead and say some of the underlying assets, such as currencies, have high volatilities, which may increase the volatility of the overall fund, yes? And I think these are the things that we covered in our previous video, because they go ahead and say it may be difficult for a fund to liquidate or redeem its underlying asset in short notice during extreme market condition without suffering a loss, yes? And I think this is a very good disclaimer, because it is showing you that even if you're going in, even if this fund is making profit, there are in certain conditions that you can make losses in this market. But again, these are extreme conditions. I want you to Note that these are extreme conditions. Yes, they can happen, but the probability of them happening sometimes is very rare. For example, the case they are talking about fund liquidation. When can we have a problem with fund liquidation? This is a time when, for example, we are in a global market crisis or a global economic crisis, and everyone is panicking about their investment and they rush in to withdraw their funds. Another scenario is, for example, if a fund manager went out of business and now you want to liquidate your investment because a fund is no longer working for you. So if you have so many people going to withdraw their funds from this kind of an investment, then they would suffer a lot of losses. But again, guys, I want you to underline this. These are under extreme conditions, okay? I made the last video I made, there are some people who misinterpreted me and they thought that I'm saying that you should not invest in these funds. But my aim is not that. My aim is to just make sure that when you're going in, you understand that in extreme conditions, you can actually lose your money. And this brings us to the idea of diversification. Do not make sure that whatever you are putting in is not your net worth, that you're putting all your money that you have in such a fund. Make sure that you're diversifying your investment, and I think that is the basic idea of us or of any fund. Making sure that they're giving you information about the risk involved in a fund, to make sure that you're diversifying your investment and to make sure that you're protected. So this is how they categorize the risk of the fund. And during my research, I actually called the team to discuss a few of these things. And from our discussion, this fund aims to preserve your capital through diversification. But this does not eliminate the potential of risk, because the underlying assets are also riskier. However, such a company establishes such an investment because they want to make money, and they are very sure that they are doing their best to just make sure that you're getting the returns you deserve, or the returns for your money. Yes. And in their website they say, our promise is to manage risk and consistently improve your returns by boosting your portfolio diversification. However, it is good you know that there are risks involved before going in. And don't forget, high risk, high potential reward. So make sure that you are assessing if the 16% interest is worth risking what you are investing in. Still a new fund, and my wish is, as they move forward, they consider including the asset allocation for each, maybe each theme, or even better for each asset, so that people, or we, will be able to know how much the fund is risking in what asset. Now, I have a question for you. Is this a risk that you're willing to take for a potential 15% return on the dollar? Be honest, is this a fund that you would invest in, or is the risk too much to take? Let me know your thoughts in the comment section. I want to see how many of you, or how many of us, think this strategy is worth it. And for those who are interested in a one-on-one session, you want to go through different investment, you want to learn about investment, you're a beginner in investment and you don't know where to start, I do offer a one-on-one financial education session, of course at a small fee. And if you're interested in investing in things like cryptocurrency and don't know where to start, you can reach out to me using this number. And if you have not watched this video where I compared two special fund, an equity fund and also a balance fund, make sure that you watch them because they are very insightful. Thank you so much for watching. Happy investing, and see you in our next video. Bye.